Hello there, this is fairbinaryoptions.com. So let's put here on the screen that this is fairbinaryoptions.com. And we're looking here at the Australian dollar and Canadian dollar cross. It is a fairly interesting cross because it is, let's say, finding itself at an important moment of time. I would say that the market is going to form here on this 4-hour chart a zigzag starting with these lows, and the zigzag that most likely is going to be retraced more than 50%. So therefore we are favoring a move to the upside to be followed by a move to the downside as well. As any zigzag, it should move with a 5-way structure. I would say that our 5-way structure for wave A has or should end around here, and then it is being formed, of course, like an impulsive move. What would be the impulsive? Well, the impulsive move should start from these lows like this and to go the first wave, then a running correction for the second wave, then the third wave in here, or maybe in here, then the fourth wave, and the fifth. We have the extension, we have everything in place, nothing is broken, all the rules being respected. Beautiful impulsive move. Then we have a contracting triangle for the B wave in red, and from my point of view the contracting triangle ended here something like 1 week from now, on last Friday. So this will be the A and the B. Like any contracting triangle, it travels within the A and C and B to D trend line. This would be the A and C trend line. And this would be the B to D trend line. Broken, all good, and now the B to D trend, as you can see, has been broken and retested. Now this retest is happening when the C wave to follow. It is not a classical impulsive move like it is wave A, but it's a so-called impulsive move that forms a terminal structure, and it should go, from my point of view, based on how this market is looking here, it should go with something like a zigzag. So this to be wave 1, and the second wave not to be this one, but the second wave to go something like let's say A, B, C, then the next wave, then another A, B, C, so to end something like this. And then you gotta go for the third wave, and the third wave to move with something like 61.8 out of the first wave, and so on and so forth, in the end to reach almost parity for this fifth wave in the C type. Now, however, after we should go somewhere like, let's say almost to parity, maybe even more than parity, something like 99.90 area or stuff like that, we should look into trading put options, because normally on any move to the upside that has a 5-way structure, we should go for market to retrace all the way to the beginning of this triangle. So what we are looking to the end of this triangle, so what we are actually looking here is a move like this and a move like this. So normally what we should do here is to favor call options with end of month expiration date. That would be in the middle, on the 31st of March, something like 3 trading days. And we should also look for put options with 1 week expiration date by the time 0.9995 counts. Well, it may look like far away, but keeping this in mind will give us a really nice expiration date and a really nice entry place as well. Thank you very much for being here. This is fairbinaryoptions.com. Make sure you check our website. Make sure you check our Binary Options Academy as well, as we have a lot of interesting projects there too. Bye bye.